Banks need our money to make money. The traditional business model is simple. They take our deposits and lend them out at ridiculously high interest rates. In other words, without our money, they don't have a business. Think about any normal business. Manufacturers buy raw materials, turn them into a product, and sell it for profit. Banks work the exact same way. Their raw material is our money, the deposits we keep in our checking and savings accounts. They take that raw material, turn it into loans, mortgages, and credit cards, then sell those products for huge profit. But here's the funny part. For savings, they pay us next to nothing. And for checking, we actually have to pay them to take our money. So we supply the raw materials, and somehow we're the ones getting charged? That's backward. And let's be honest, they make a lot of money doing it. Here's the reality. The bank pays me a very low interest rate on my savings. It's practically next to nothing. Meanwhile, they lend that same money to someone else and charge 10, maybe 20% interest. Just look at credit cards. Most charge close to 20% interest on outstanding balances. And yeah, look, I understand it's more complicated than that. They offer many banking services, highly regulated, high operational costs, etc. But anyways, my point is, why do they still charge monthly fees on my checking account? Whatever justification is out there, banking fees drive me crazy. Because of that, I got addicted to digging through lists like Best Checking Account of the Year or Top 10 Credit Cards with No Annual Fees, hoping to find that perfect, economical banking stack. So, here's my simple banking stack. A checking account with the lowest fees, a credit card with no annual fee, and a simple savings account. Of course, my emergency fund lives in my savings account, ready to handle unexpected events. This setup is simple, economical, and effective. You know, they always tease me with these so-called premium checking accounts with ridiculously high monthly fees, with things like unlimited transactions, free bank drafts, or personal checks that I never use. Okay, let's actually think about this. Do I actually need unlimited transactions from my checking account? To answer that, let's shift our focus to credit cards. Has anyone ever seen a credit card with a transaction limit? Exactly. So why pay extra fees for checking when you already get unlimited transactions through your credit card by default? And I use my credit card for almost everything. Groceries, gas, bills, coffee, and, yeah, beers. And, honestly, I rarely spend directly from my checking except for paying rent or occasional ATM withdrawals. Even if my checking account had unlimited transactions, I'd still use my credit card. Why? If I buy cheese with debit, money leaves my checking and I get cheese. But if I buy cheese with credit, I get cheese, I earn cash back, and it builds my credit score. That's a triple win. I'm not just spending, I'm earning and building. Yup, I understand the common concern, overspending. But that isn't a banking problem, that's more of a discipline problem. I treat my credit card like a debit card. I never spend more than the cash already sitting in my checking. To keep this tight, I follow one simple routine. Every night, I review my daily credit card spending. Then, I move that exact amount from checking to savings. By the way, this transfer is free. It is like moving money from your left pocket to right pocket when both accounts are at the same bank. And if your bank charges for that, we have more than one bank to choose from. It really takes less than 5 minutes. Plus, it forces me to review my spending every day, which is a great habit. Sure, if daily feels like too much, do it weekly. Just total up everything you spent on your credit card that week, then move that matching amount from checking to savings. Then, on my credit card's payment date, I move all the money I set aside, everything I transferred each night, back into checking to pay the bill. Why the extra step? Because paying bills directly from a savings account usually triggers a transaction fee. And yeah, I know, banks love to play these cute little annoying games, but I just move it back to checking with one click on my app, then pay the card. Just like that. See, checking has one job: clear the credit card bill. One transaction a month, one simple click. So, why pay for unlimited transactions I don't need or services I don't use every day? So here it is: low-fee checking, credit card with no annual fee, and just a simple savings. Redundancies eliminated, cashback captured, credit score is growing. I thought I was optimizing, then it hit me. No annual fee isn't the same as free. And the actual price I paid for that? I was leaving hundreds of dollars on the table every single year. Okay, let's rewind a bit. I always had a basic checking account because I didn't need all those extra banking services daily. But that didn't mean I'd never need them. An occasional bank draft, a certified check, or a random service fee here and there quietly added up over time. But the real cost, the invisible cost, came from a credit card. My no-fee card earned bottom-tier base cashback rewards. Meanwhile, premium credit cards, the ones with high annual fees, typically offer way higher rewards on the same spending. You don't earn more because you spend more. You earn more because the card pays a higher accelerated rate. When I did math, wow, the invisible cost of the free mindset was actually way bigger than the annual fee itself. Yeah, I get it now, but even if this all makes sense, doesn't mean I am okay paying ridiculously high annual fees. So, I did a bit of digging and realized there's a little-known approach that turns fees into returns. What if there is a simple way that cancel the fees while doubling, even tripling, the cashback rewards? Hey, think about this. Bank is now paying you, not the other way around. To activate it, we need to quickly revisit those premium checking accounts and understand how it can integrate with premium credit card. Now, let me be crystal clear. We're now talking about both premium checking and premium credit cards, and they both come with ridiculously high fees. But there's a switch that disables that fee entirely. This is that switch we've all heard of but rarely pay attention to. Simply maintain a minimum balance in checking account, typically around $6,000. You just deleted high monthly fees for the premium checking account, and this is only the beginning of the whole story. Now you may wonder, where do I get $6,000 from? Break my retirement fund? Nope. My emergency fund has been sitting in my savings account for all those years, earning almost nothing. And I was completely okay with that. Because the purpose of an emergency fund isn't growth anyway. It's not meant to make you money. What's really important for the emergency fund is immediate access when something unexpected happens. And a checking account serves that purpose just as well. It may feel a bit counterintuitive at first, but stick with me, it'll all come together. So, simply by moving my emergency fund, enough to cover 3 to 6 months of bare-bones living expenses, rent, groceries, etc., into a premium checking account, I unlocked the entire premium ecosystem for free. Let's be fair. Am I suddenly using personal checks? Nope. Do I suddenly need unlimited transactions? Still no. And if all these just-in-case perks are free, bank drafts, discounts on safety deposit box my grandma loves, and more, why not take them? But here's the real kicker. The huge prize is hidden in how checking integrates with credit card. Most premium checking comes with an annual fee rebate on their top-tier premium credit cards. Yes, those with ridiculously high annual fees, but also with ridiculously boosted cashback reward rates. Suddenly, zero fees on both premium checking and credit card of your choice, all because I simply moved my emergency fund from savings into checking. Sure, it doesn't have to be an emergency fund, and I can use any money from my savings to unlock the same benefits. But if I later decide to use that money for long-term investment or buying a home, car, laptop, or other expenses, it will disrupt my banking setup. That's why, for this purpose, my emergency fund is the perfect candidate. Yes, I initially worried, if my emergency fund is in my checking account, won't I easily spend it even before I know it? Surprisingly, the opposite happens. In a savings account, the only thing stopping you is willpower, and willpower drains. Eventually you say, I'll use a bit now and replace it next paycheck. But when emergency fund sits in your checking account as a fee waiver, and dropping below triggers that ridiculously high monthly fee, that fee becomes a psychological electric fence. You don't touch it unless it's a real emergency. This isn't willpower anymore. It's a system designed to reserve it. Let's go back to that grocery store. Before, I buy cheese, I get 1% back. Now, same cheese, same spending, but 3 to 5% back. Same spending. Triple, quadruple the return. Over a year, this adds up to hundreds of dollars. Pure profit. So, here is optimal banking stack. Supercharged cashback rewards. Premium banking with no fees. Credit score growing. Emergency fund sits heavy and protects. By the way, don't get confused with those one-time welcome bonus. This is an ongoing, repeatable, profit-generating banking setup. And if an emergency does happen, the process is simple. Open your banking app. Downgrade the account to a basic tier. Then, use the funds to manage emergency ASAP. And the credit card? Even in an emergency, you still need groceries, gas, and maybe more beers? Your accelerated rewards will likely outweigh monthly portion of fee anyway. But if things stay tight, downgrade the card to a no-fee version. Most banks make this easy in the app. The system stays flexible, always. Now, let's recap. You park your emergency fund in Premium Chequing and waive the fees. You capture maximum rewards and enjoy all banking services. See, I don't chase those best account of the year rankings anymore. That single product mindset never tells the whole story. Most major banks in Canada design and structure their checking, savings, and credit cards to work seamlessly together for obvious reasons, not to lose you. If so, the objective becomes to give what they want and, in return, get the most out of the relationship. It's a fair trade. Once you understand how they integrate, you can always find a way to combine puzzle pieces into the perfect banking stack that fits your needs and lifestyle. But here's the thing. What if you want to compare optimal bank stacks across different banks? While the idea is simple, finding the best mix of checking, savings, and credit card isn't as easy as it sounds. Each bank offers multiple options for its top-tier credit cards, each designed to focus on different spending categories. Some pay more towards travel points, while others focus more on groceries, and so on. So many choices, confusing, it drags us into chaos. Different cards have different spending caps per category, each card emphasizes different spending types, and every bank mixes its own rules. We know what we need to do to set up the optimal banking stack, but there are so many choices. And I'm not done complaining yet. Let's look at a few more scenarios. What if your emergency fund is below $6,000? Then what can be the next best setup? Or perhaps you prefer travel points over cashback and want to see your own favorite mix of checking, savings, and credit card and compare it against the optimal banking stack. The best way to make an apples-to-apples comparison is to simulate it using your average spending pattern and emergency fund level. And trust me, doing this manually in Excel or Google Sheets gets computationally heavy and messy. But don't worry, I built a free interactive banking stack directory, linked in the description below. With one click, it runs all the math and gives you a true apples-to-apples comparison. It shows annual, ongoing, pure profit for all possible combinations of banking stacks across big banks in Canada. Finally, for those who want the full mechanics under the hood, you can download the step-by-step guide to optimal banking stack. Use the link below. Thanks for watching, and I hope it helped. Don't forget to like, subscribe, and turn on notifications. I'll see you in the next one.